I'm Owen Bigland. This is the Inside Edge video blog. So this past spring, there have been a number of real estate conferences held in Vancouver. Every spring there's a number. There's the Urban Development Institute, which does an annual convention here in Vancouver. They bring in some various economists to talk about the housing market and the economy in BC and in the Lower Mainland. There was recently one called the Real Estate Forum, which was held this past April, early April, again, that focuses on the Vancouver housing market, real estate development, and where they see prices and demand going forward. So, and then there was a third one that was that's held. It's a developers conference that brings in all the big boys from Vancouver. They usually meet at the Trade and Convention Center and talk about the year that was and what they foresee for the future. So I have been posting all of these, the full articles on these conferences, if you follow me on Twitter. Go to my Twitter account. If you haven't started following me yet, I've got about 3,000 followers on there. I'm posting stuff every week, multiple articles on the Vancouver real estate market, investing, the market psychology you need to be a successful investor, creating wealth. I've got all kinds of good stuff on there. So one thing though, I will tell you though, as far as Twitter goes, I don't engage socially on Twitter. So if you want to tweet me, I get tons of people tweeting me for various questions. I'm sorry, I just don't engage on Twitter and don't get back and forth answering questions. I just don't have the time. But I am posting some very, very good articles. I've got some access stuff to some of my guys in New York, some private equity articles that they'll send me, even some of their holdings I'm posting to my Twitter account. So follow me on Twitter. That's where you'll find all these. But let me just talk about a few of them here. And some of you that follow my blog here that think we're in a housing crash and the market's going to plummet and you're going to be able to buy that Yaletown condo for 300 grand next year, you may want to look away or give me the thumbs down and move on. You're not going to like a lot of the stuff that these economists are predicting here. Now, again, I never get into predictions short term with real estate. If you guys have been watching my blog here for the last 8 years, I have no idea what the Vancouver market's going to do 6 months from now or at this time next year or in 2020 or 2021. What I do know though is what it will do for you in the long term. My golden window, if you've watched me for a long time, the holding period is 8 to 10 years. If you're going to buy a piece of real estate as a principal residence or as an investment, if you can hold it for 8 to 10 years, you are going to make money on the unit, guaranteed. That's my holding period. And the longer you hold it, if you can keep it for 15, 20, or 30 years, you're going to do nothing but make fistloads of capital gains on that property. That's just the way it goes. They're not making land anymore. People are moving in every year, more people. They're not creating any more land. Prices have nowhere to go but up in the long term. In the short term though, 6 months, a year, 2 years, anything can happen. Interest rates, taxes, market sentiment, buyer fatigue all have a big impact on what the market does in the short term. But from the real estate forum that they held about 3 weeks ago in downtown Vancouver here, they brought in a bunch of economists, including the guy from the Central One Credit Union. He's their chief economist. Helmut Pastrick is his name. And he caught some headlines here because the headline and the whole speech that he gave was that Vancouver real estate prices will double between now and 2041. And then he actually went on to say in the article that actually, you know, it wouldn't surprise me if it goes up a whole lot more than that, than double. He's using ultra conservative numbers there. So between now and the next 22 or 23 years, he is. My rule of thumb, I've been telling people, you can expect that price to double about every 18 to 20 years. And I'm using conservative numbers there because that's just how I roll. I don't want to overpromise and underdeliver. I use very conservative numbers with that. As a matter of fact, if you would have bought a condo 7 years ago in Yaletown, you've doubled your money. But do not expect that going forward. That was an anomaly. It was a perfect storm. Don't be relying on those type of gains moving forward. But every 18 to 20 years, this economist thinks over the next 22 years, conservatively, you can expect it to double. If you break it down, that's what, about a 3.5% annualized growth rate, maybe less. Maybe someone can crunch the numbers for me. Now, when inflation's running at 2.5% or 3%, real estate will always keep pace at the very least to inflation, not in lockstep, plus another 1 or 2% generally. So when you say the price of a condo that you buy today, a 1-bedroom or a studio condo in Yaletown, let's say for $500,000, 18 to 20 years from now, you can expect that property to be worth $1 million all day long. That's just the way it is. Everything continues to go up, not building any more land, and 40,000 people moving into the Lower Mainland every year. But he went on to say that the reason is simple. The region's population is increasing. Densification is the name of the game in the Lower Mainland. Developers are trying to build more homes for more people. Throw in the effect of increased regulation, rising construction costs from materials to labor, and there's only one direction for prices to go, and that's up. So this guy's a pretty well-known economist, and I know people will disagree. They'll give me a thumbs down saying, of course he's gonna say prices are gonna double. He's from a bank. But this guy really has no biases whatsoever, and he's one of half a dozen speakers that they had at this conference, economists, that will easily predict that prices will double in the next 18 to 22 years. The other one that was held this past spring was the Urban Development Institute, and they have one every year. It's the same kind of thing. They talk about development, construction, where they see the market going. This year they brought in a guy from the McKinsey and Company based out of Singapore, an economist out of there. He was saying basically the same thing the guy at Central One Credit Union was saying. Vancouver is not building enough homes. The prices will continue to rise over the long term. It's an incredibly desirable city to live in, and they're just not building enough supply. There's a combination of people who just can't find enough housing. And he went on to say that Vancouver is not an anomaly in this. And I've talked about this for quite a while too. Many of the world's good cities, 60 you could probably name off here, are simply not building enough homes to keep up with the demand. This is where people want to live, in these desirable cities like Vancouver and Toronto and Southern California, San Diego, San Francisco, London, Singapore. There's 60 or 70 of these cities I could rattle off, and they're just not building enough housing to keep up with the demand. So reducing. He says the way to help kind of mitigate some of these price rises over time will be to reduce the approval times, create an attractive tax environment, is how governments can help builders and developers build the housing that's needed. So reduce approval times, create an attractive tax environment. So if you watch my blog from last month, of course, we all know that they're doing the absolute reverse of that. The approval times to get anything built in Vancouver are atrocious. The fees are some of the highest in North America, if not the world. And our tax environment is some of the most strict in the world and heavy-handed in the world. So we're doing the opposite here. Instead of building more homes and making it easier for developers to try and keep up with some of the demand, we're doing the reverse. So the final one I'll just talk about was a developers summit that was put on in Vancouver here about a month ago. All the big players, the Anis, the Bozas, all show up for this. They have a bunch of economists. This time they brought in some people from Rennie. They brought in a guy by the name of Andrew Ramlow, who is the vice president of market intelligence at Rennie. And he was, hate to sound like a broken record, but you can look at the full articles here on my Twitter feed. He was basically saying the same thing, that the housing start numbers do not take into consideration the demolitions that happen in tandem. So remember that. That's important. When they say they're going to build 23,000 new homes in the Lower Mainland, you have to take out 15 or 20,000 or 10,000 or whatever that are demolished to make way for that new housing. It's not one for one. They're creating more density. But if you've got 23,000 new homes, you might have 5,000 that were taken down. So it's the net number that you want to look at. But he's saying the same thing here. We are not building enough homes to cover the demand. He says that we should be building about 23 to 24,000 new homes every year in the Lower Mainland. Right now, by the time we hit 2021 here, we're only going to be building 17,000. And looking out beyond that, it will probably be less, because remember, it's what this market is currently. What's being built now won't be getting keys for 2021, 2022, 2023. So as I've been blogging about, developers are on the sidelines right now. By 2021, only 17,000 units will come online, estimated, when we need closer to 24. It's going to be much uglier after 2021. We don't have those numbers yet because there's a 4 year lag. But the way it's looking right now, those numbers will be far less than 17,000 with the way the developers are on the sidelines. Thus, you're going to get a coiled spring effect where demand is ultra high, which it already is, and supply is even lower than what it's been, which is not a good recipe there. So the bottom line is, let me wrap it all up for you guys, what I feel about these things. These are what I have been talking about for many years on my blog here, and why we have the prices we've got, and why as an investor and why as a homeowner, this is music to most investors' ears like myself. I'm already getting bidding wars on properties for tenants. My rents are increasing dramatically over the last 3 or 4 years. I've got 6 or 7 applications that come in on most of my units when I do put them up for rent on Craigslist. This will just continue. This is the situation we're in here. We're not building enough homes, we're taxing everything to death, and we're stifling development. And it will lead to more of the same here, or maybe even make it worse. We'll have to see. But the bottom line is, if you saw a blog that I did about a year ago on how the window is closing on downtown Vancouver condos, I said there the same thing, that it's already out of reach for most people anyways, buying a $650,000 one bedroom, unfortunately. But it can be done. As I've always said, you gotta work, you gotta hustle, you're gonna have to make some sacrifices. But that's not gonna get any better, because everything from this point on, as I've said, is gonna be luxury condos in downtown, starting at $1,700 a square foot and up. You can still buy right now at around $1,000, $1,050 a square foot for concrete downtown Vancouver in a good building. You can buy a little less than that if you want, but around $1,000, little over $1,000 a square foot. Makes sense that while the getting's good, I think I would still be a buyer here, when nothing down the road is going to be anywhere near that price. And that's not going to change when you talk to these economists. Things aren't going to get better. If you think that the price of those condos is going to go back down to $500 or $550 a square foot and get more in line with what incomes are here, you're going to be waiting a long time, because as I've said many times before here, Vancouver is an equity-driven market. It has no connection to what incomes are here. And that's what everyone always points to. The people that don't know what they're talking about always point to the fact that the average guy makes $65,000 a year, then that condo is going to cost him $600,000 or 22 times his net income. When you look at it from that metric, it doesn't make sense, and we're in a bubble. But we've been like this for over a decade, 15 years now. It's an equity-driven market. Watch my older blogs on that. It's people moving up market. It's also bank of mom and dad, but it's also money coming from all over the world. Not just China, but other parts of Canada, the US. Vancouver is an incredibly desirable city, just like about 50 or 60 other cities like Vancouver in the world. People want to live in those cities, they'll make it happen. They'll sell the house in Montreal and buy a Yaletown condo for $1 million cash. That's the buyers that I've got here. But I will, all of these are on my Twitter feed. You can click on these, plus dozens and dozens of others that I'm posting every month. It's kind of, I call it the yin to the yang. So much negative stuff out there on Vancouver real estate. The sky is falling, which of course it's not. This will kind of paint a much different picture. This will be the other side of the story, from unbiased sources on where they see the market going, what's currently happening in the market. Now on that front, just to finish it off here, the current state of the market right now for condos, which is the bulk of the market, is a balanced market right now. The sky is not falling. We're in a very healthy, balanced market. As a matter of fact, I've been enjoying this market. It's been, especially when you're on the buying side, you've got a little more time. Selection still isn't fantastic, not on the good ones that I like to go after for my clients. There's a bit of a waiting game there. It's not an abundance of good quality 1 and 2 bedrooms. You've got to wait generally for the right one to come up. But when you do, you can usually negotiate an offer below asking price, which is nice. We haven't had that for the past 4 years. So it is a healthy, balanced market in condos right now, which is the vast majority of the market. That makes up 80-85%. That's all most people are interested in. Now, if you want to buy a luxury home in Kerrisdale or Shaughnessy, then there are some fantastic deals to be had, and it's a strong buyer's market. Or if you're looking for a luxury condo in Cole Harbour for $4 or $5 million, give me a call. We can lowball an offer, and I can get you a unit that probably would have sold for $1 million more 2 years ago. But for the most part, the 1 bedrooms, 2 bedrooms, 2 and dens, the condos priced under 1.2, it's still a balanced, healthy, balanced market, which is nice to have for a change. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.